let's take a look at some information and charts on Matic for Brave New Coin. So the first thing you need to know about Matic is it's no longer called Matic, it's called Polygon now. Just to add to that layer of confusion, it seems like all the best DeFi or DeFi adjacent projects have rebranded in some way, shape, or form. Aave Land also coming to mind. But anyway, they have 11.3 billion market cap, exploding in recent days. Total supply will eventually be 10 billion tokens, so the diluted market cap is higher than the current market cap, also something to keep in mind. And anything that was an ICO, it's important for me to really understand the tokenomics first, because if a bunch of coins are being unlocked between now and October, or now in next year, and that's probably going to have an effect on price. So like I said, Matic switched to Polygon. Polygon is an interoperability play, a chain of chains, a side chain. That's the ultimate use case for it. If we go to their website specifically, I say it's a framework for building and connecting compatible blockchain networks. I mean, the dream is that all this piping, Lightning Network, DeFi, whatever, all happens in the background. I mean, we're almost there with MetaMask. You can send any ERC20 to a MetaMask ETH address or whatever ETH address, and it shows up, right? So we're almost there. The next step is sending anything anywhere and the wallet just knowing what it is. And stuff like Polygon helps us get there. Now, that isn't necessarily going to move the needle on the Polygon token price, but it makes the user interfaces, usability, all that stuff a lot more pleasant to interact with. So they also go on to say they plan on aggregating scaling solutions to support a multi-chain ecosystem. And this kind of reminds me of globalization. If it's cheaper to do stuff elsewhere than the United States, then you're competing for labor prices. So at the end of the day, will Ethereum accrue value relative to the other chains? And I don't know the answer to that question, but that's something to think about. It's a type of arbitrage, certainly. If you can bounce between Dot, Cosmos, Avalanche, as a user, I don't care. Obviously, I want the best experience for the cheapest price. But will Ethereum take a hit for that by not being a silo? Can things actually grow together? We'll find out. So they go on to say that it's a challenge for all this stuff to talk to it, everything else, right? And we know that with DeFi, the DeFi interoperability on ETH is great, but between all of the chains collectively, it's getting harder and harder, even though these dApps are operating on multi-chain at this point. And we're starting to see growth in the Polygon TVL for these dApps, which is another reason why Polygon's probably taking off in the way it has. It's not only building a use case and looking for a problem. We had a problem on ETH. We had high fees. We had clogged transactions. And Matic actually worked as intended. So their solution is to allow developers to basically get access to all this stuff. And at the end of the day, a smoother user experience. They're launching all sorts of stuff everywhere. As any good DEX should do, they should go multi-chain. 0x approach, Sushi approach, all that stuff to me is preferred to Uni, which is very much tied to ETH, or it looks like that's the case. If you're a dApp, what do you care, right? Go on every chain you can that makes sense and is secure, because if you're able to get accessed, from multiple chains, multiple channels, your token value should go up. More users, more better, higher price, that sort of thing. So they go on to say here what they plan on doing for 0x API, and this is the beginning of sidechain takeover, layer 2 takeover, that sort of thing. It's definitely a silent battle and war going on between what's going to win out, ZK rollups, or any of the other layer 2s. Ultimately, if we don't have tons of activity on chain, we don't really need the layer 2s. Similar to the gas ceiling, we don't need to keep raising the gas ceiling if we don't have activity. So if this activity is lasting on ETH, then Polygon should see a spike in value. If activity on everything drops to nothing, Polygon's going with it. It's going to zero. Because if its whole use case is undermined by a lack of activity on these chains, then there's no reason to use it, right? Here's their layer 2 stuff that's coming or live. Plasma, ZK rollups, Optimistic, Validium, never even heard of that one. They also have plans for proof of stake and or currently using proof of stake, additional side chains, additional enterprise chains. They mentioned Quorum in some of the documents as well, but their goal is correct in that they should be connected to as much stuff as humanly possible. This is from the Binance research. The other part about an ICO and a token is, does it have a use case? Does it have a valid use case? You know, BNB is one of the most solid use cases of any token that we've seen from a trading perspective. And Matic is similar in that you can use it for transaction fees on the network, obviously, proof of stake, consensus as well. And then there's an additional block rewards type mechanism coming soon, I believe. And the other thing I mentioned is the tokenomics, and we can look, like I said, 10 billion total tokens eventually, and it looks like the next tranche, or however you want to call it, is being released in September. The foundation, now the foundation isn't going to dump everything on you all at once probably, and it's good that the percentages here are low and split between multiple parties. You don't ever want to see, you know, like Link's case where there's 3 pieces to this pie chart. It's circulating, some staking thing, and then the parent company, right? So although the team, advisors, foundation, you know, all that may dump on you, the rest of this is unlikely to continue dumping on you. But if I'm a launchpad person or a seed investor or anybody holding since the beginning, to see the chart where it's gotten is awfully tempting to let a majority of it go. Here's the transactions per day chart according to one of the explorers. And the difficulty here is finding this data, first of all, which took a second, but understanding the difference between transactions on the chain itself, Matic, Polygon, and then the Polygon token transactions. So it looks like they have 6 million tokens, or 6 million transactions per day at this point, which is up significantly from around 1 million that they had in May. So you have a 6x in on-chain activity there. But if we look at the token transactions for Matic, they were about 2 or 3x, you know, since May, based on the stats I'm getting from Into the Block. Volume's kind of flat as well. Total volume, total transaction volume per day, though, is up significantly, likely due to all-time highs in prices. Now, here's the real heat of the meat, because we're seeing TVL creep up on Polygon. It's rivaling BSC, the Binance chain. The net value is at 5.68, and we can see where it's going. It's going to most of these ETH DeFi apps, dApps, you know, Sushi Curve, Aave. This list will grow, undoubtedly, so long as Polygon is successful. There's no security risks. It's easy. It's, you know, it's happening in the background. I don't know how Swift works. I don't know what the banks do in the background, right? I don't care. I just care that when people are paying me money or I'm paying people money, it just gets done, right? And that's ultimately the goal here. If Polygon works as intended, if we can do stuff through Polygon and ETH at the same time, great. On Sushi, you know, Aave, I don't care, right? I'm just lending, you know? So to see this jump along with the on-chain transaction activity makes sense to see where the price is at the moment. One caution though, just like Maker, just like everything under the sun since January, it's exploded. So everything looks great right now because it's arguably an everything bubble type situation, but Matic really saved the day for ETH in many ways because it allowed transactions that were high costed or extremely costly on ETH to move through Matic. So just like the Maker chart, nobody cared about this thing until January, and everything exploded, right? And it's actually held up better than almost everything else and just is sitting here at 180, kind of flat on the USD chart. So I like to support it at $1. I like to support it at the 200-day moving average at around 65 cents. But the big caution again here is if transactional throughput or activity, you know, need for that decreases substantially, if DeFi yield farming drops off, this thing's going to take a hit big time. So keep that in mind. That this looks bullish now, obviously bounces harder than everything else has. Trend-wise, the cloud likes it as well. But ultimately, it's going to be, to me, down to the fundamentals are more important in this case. So still above the cloud, will be for a while. I'd watch it into late June, early July, when it may drop below $1. Then you'll start to see the first signs of bearishness since January. when it exploded in a gargantuan percentage. So this is screaming for additional pullback. You know, it had whatever 60, 50%. This could easily retrace to 30 cents, 38 cents, something like that. And ultimately back to this multi-year range at like 2 pennies, something like that. And here it is on the BTC chart. Kind of looks like Doge, right? Where it just exploded. This is log and it still looks insane. Essentially went from sub 50 sats to 4,600 sats. So that's a mega move. 50 and the 200-day moving averages, don't even know how to interpret this because both of them are sub 3,000 sats. So you have some support at 4K, some at 2K, some at 1K, but I would be awfully nervous looking at this, just like a, you know, AMC, Doge, anything that's exploded since January isn't going to attract the strongest of holders, most likely. Especially with coins unlocking still, around 38% of the coins to be unlocked. You know, I'd expect this to peel off some on the lows. Here's the Matic ETH chart, also screaming, you know, since January. Did put in a bear div here at the highs. I don't want to say it's done, but it definitely looks like it needs some time. It's a little overcooked for me. So they're doing what they've set out to do. They're implementing multi-chain approaches to everything. So long as it keeps working and there's a need for it and it's secure, it should do very well. You know, if they can continue to get TVL on these DeFi dApps in a multi-chain way, I expect these coins to do well as well because they're multi-chain, and I expect Polygon to benefit from that as well. The question is, how much does ETH suffer from this, if at all? You know, does ETH benefit from Polygon existing? I guess we'll find out. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management. You can send ETH or USDC or just follow along by watching what I'm doing here. You can see deposits, withdrawals, trades, all done through DEXs. Polygon is not in the DeFi portfolio, but we do have the ability to trade it. Just based on technicals and fundamentals, it's worth a watch. You know, it's just tough to see a chart like this since January that hasn't had a bear market, really. You know, it kind of was just coexisting at zero basically since January, and then it found a use case. So it's hard to want to jump into something like that that's had this parabolic up move. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.